What's up, you guys? Today we're going to be talking about MGM Grand. If it's a good time to buy this hotel and at what price point you want to buy it. All I ask, if you could just take 5 seconds of your time, hit that like button below. Really helps out this channel, especially since it's new, and subscribe if you haven't yet. I'm going to be giving you guys my personal opinion on it, whether to buy it or not, and at what price point you want to buy it at. I'm going to be going on this platform right now and showing you guys my play for MGM. So here we have MGM on our left here. I'm here using the Fibonacci tool. For MGM, I personally think we haven't hit the bottom yet for the stock. This company has a lot of cash on hand. I personally think they're not going to go bankrupt. They're not going to have an issue with cash. They even put out some news in the press that they're not going to use the stimulus package that they've been offered, but I do think it's a really good investment long term. I think it's pretty much even a safer and better long term investment compared to airline stocks and cruise stocks, because these people have a lot of cash on hand compared to all these other companies. It was at the high of $33. It dropped all the way to $5.90. It bounced all the way to $15 with the stimulus package of last week. I think we're gonna see it below $6. We might see it at $6, $5, even $4.50. We might see it bounce at 406 area. I do expect to see lower lows though, and anything below at this target price is a really good buy, long-term investment. I'm going to be showing you guys the S&P 500 on our right here. It's been downtrending for the most part. You can see here on the bottom that the volume has been dropping. ICE is almost showing that we're almost overbought. So I personally think that this here is a little bull trap. A lot of people are still on lockdowns. Countries are basically shut down, including us. You know, nobody's really working. This little pump is just because of the news with the stimulus package. Honestly, the stimulus package is just basically a band-aid, you know, and the Fed's helping out the stock and, you know, the economy, but it's not going to solve the whole problem. You know, everybody's not working right now, and the situation is just getting worse. Every day they just extended it till April 30th that we're going to be shut down. So you can imagine that's just being precautious. You don't know, by April 30th we might have even more issues, and we might have another month or another 2 weeks of lockdown. A lot of traders that are experienced traders are buying puts around this area, especially if it hits the 270 area. They're going to start loading up in puts. I personally think we're going to see eventually maybe the 200 area and the 180 area. That's my personal opinion. I could be wrong. You want to always do your own due diligence when buying stocks and do your own research. Another tool, I've been mentioning this on all my other videos, is using the Fear and Greed Index. This is a really good tool if you're a beginner trader. Find this tool. All you have to do is basically search up Fear and Greed Index. This is actually going to show you the market is reacting. When this thing was dropping to all the way to the bottom, there was extreme fear. It was about 2 to 3, and now it's at 27 with all the stimulus package and this little spike. But I personally think we're going to see around the low again, maybe like 1 to 5 area. When we start seeing lower lows, people are going to be panicking and, you know, thinking the sky is falling. So I personally think we're going to see lower lows, more panic in the market. This is a really good index thing to use. When we were here with the S&P 500, you can see how this has been overbought with this line here and how extended it was here. We were extremely overbought here. I personally didn't think that we're going to drop this hard, especially with this pandemic. I thought, you know, we might have bounced here, but I really didn't think that this was going to be the reason why the market was going to crash. But it did. You know, especially the US was caught off guard for this. Within this whole time frame, especially on this Friday, April 3rd, we're going to get a scheduled release of the employment rates and how many people are unemployed currently. Pretty much think it's going to drive the market either up or down. I personally think it's going to make the market a lot more bearish, and we're going to see maybe a downside. This week we can probably see the SPY maybe breaking down or hitting the 270 and then breaking down. We are almost at the overbought side. The volume is fading, so I personally think we're going to start fading. If you want to load up positions for different companies and other companies, I would wait until we break down, maybe hit the 200 mark, 180 mark. That's a great time to start loading up positions long term. I want to mention, even after this whole, you know, pandemic, we're also going to have a lot of issues with the economy as far as jobs and funding and basically getting this whole economy getting back to normal. a lot of people are going to lose their jobs. Businesses are going to be slow because there's not going to be enough cash to stabilize the business, and it's just going to be a whole snowball effect. So keep that in mind, guys, and just wait for the right opportunity. Just to overview this, I do personally think MGM hasn't hit the bottom yet, and if you want to go long on MGM, I would personally wait. Anything below $6, you can start actually loading up, maybe even $6.50, $7, but start averaging up, adding in little increments, right? At $7, $6.50, $6. Once it hits below $6, maybe $5.50, $4.50. You want to start adding up positions here, and that's just my opinion. I also made other videos talking about cruise lines and airlines and all these other companies. If you have any suggestions or any companies that you want me to do a stock analysis on, just leave a comment down below. Or if you have any questions regarding this, feel free to leave a comment down below. I want to make the comment section as helpful as possible and to help out especially any new traders that are trading and want to invest long term in the future. And I'm going to show you guys a little bit of history in 2008. You know, in 2-3 years it would be a really good investment. So we have MGM here, and it hit the low almost $6, and then let's compare it within 2 years. The low of $1.81 per share. So it went all the way from $100 to $1.81. That's crazy. I didn't expect it to fall that much. So let's see, within the 2-year time frame of that, it went all the way to $16.65. So if you would have bought the low here of $1.81, sold at $16, that's about, you know, 9 times your money you initially invested. You could have even sold here. You probably would have even sold here after you saw that big spike of $1, and you made $14 increase percentage, and that's just within a small time frame. Especially if it's a long-term investment, within, you know, it might take a couple, maybe 2 to 3 years, but you're going to see an increase on your investment. So you can see here in 2008 it went really high. It was at $100 per share. Right before here they filed bankruptcy. You know, MGM comes back from near-death experience. They literally lost everything. You can see here with this article, they have a lot of cash on hand. They even are not taking any stimulus package offers. MGM won't accept coronavirus bailout money. The biggest casino operation that has declined the offer. They supposedly say they have $3.9 billion in cash on hand, and, you know, pretty much can handle this whole crisis without taking any stimulus money. $3.9 billion is a lot of money, and for that, you know, I think they will be a good long-term investment, especially withstand this whole mess that's going on right now. If you ever want to look at the financials, actually just go to Market Watch here, type in the company symbol MGM, and you can click here on financials, and you can see how much cash they actually have on hand. Assets of $35 billion. They do have liabilities of $22 billion, but the cash on hand should sustain them for this period. So I personally think the stock is a buy at a low of, you know, anything below $6. You can even start adding up, like I said, positions at $6.50, $6, $5.50, and anything around this area would be a good buy. So hopefully this video helps you guys out, whether if you want to buy MGM or not, and at what price point you want to buy the stock at. We're going to start answering 3 questions on every video from our last video. So make sure to leave a comment below if you want me to answer what do I think about hotel stocks. I'm actually going to be buying some hotel stocks, Hilton especially, and Marriott at the right price point, of course. I'm actually thinking of making some videos on that, so if you haven't subscribed yet, make sure to subscribe if you want to see those videos. Do I think the other cruise lines are worth looking at compared to Royal Caribbean? I honestly think since Carnival is the biggest leader in that, I would kind of spread even. I wouldn't want to put all my eggs in one basket. Of course, I would like to find the right price point for each company. Carnival and Norwegian are good buys at a right price point. I don't think we've hit the bottom yet for the market. I do think in about a month or two we'll probably see the bottom. What I personally would do is buy increments for that stock, little by little, until you're comfortable with the position you have. So Norwegian doesn't qualify for stimulus aid. I'll give you a reason why you should still buy it. All these cruise line companies really don't pay federal income taxes. That's why they're probably not getting the stimulus package. Carnival pulled out a statement saying they were aware and they were not really expecting anything. I honestly think it's still a good buy. I honestly think the stimulus package is only like a band-aid. It's not really going to help the whole situation, even with these airlines and hotel industries that are getting hit with it. I honestly think it's still a buy at a right price point. It's more of a high risk, high reward type of play. play. I wouldn't put all my money in the cruise line industry. I would diversify and put it maybe in the cruise, airlines, hotel industry, and so on. Also, make sure to like this video and subscribe if you haven't yet, and I'll see you guys on the next video.